Yeah. Neck's still a little bit sore, but at least I can rock. All right. Good morning. Welcome to Forex.Today, the YouTube community of 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble. Focus on the long term. Never risk money you cannot afford to lose. Hey, like I said, welcome. Markets are up. Check the negativity at the door. I hope you're having a wonderful day. Hope your trades are going your way. While you're here, let me share some technical and fundamental analysis, experience from my trading career that might just be helpful. You can influence where we go today in the content by being involved. Just remember to treat your fellow traders with dignity and respect. If you're a spammer, we're not interested in your nonsense. Let me know how it can help. In the description below the video, there's a link to my book, Strategic and Tactical Forex Trading. There's a link to my coaching services at fxbootcamp.com. There's a link to tradersway.com, an ethical and trustworthy foreign exchange broker that wants to develop a symbiotic relationship with you, meaning they want you to become a client, but they also want you to succeed. The more you succeed, the better they succeed. So if you open up a demo account, you can check them out. Meanwhile, maybe, just maybe, they can earn your loyalty and respect like they earned mine, and you'll be super happy. Okay? They want to be your service provider. So they want your business of Forex trading to succeed. This is what I've been doing in the morning. So the oil trading group met this morning. Here's our little box. There's a trade. The bottom area here is the first at that time bullish level of support. Then we had a giant bullish engulfing candle. Then it came back and hit our next level of support. Then it came up, retested, and has made yet another higher high. Our 382 is on its way to the 1618. Interesting. Cool. So that's interesting. Let's take a look at others. How about gold? Let's look at gold. And I find gold fascinating right now. I might change my opinion on gold here. It's cool. It's cool. It's interesting. Let's go out to maybe a daily chart. And we could do stuff like, let's insert, let's do price action pivot points and do what? 133? Oops. Well, let's just leave it at 55. Okay, there you go. Okay. So if I wanted to be a buyer, do I buy there? No. Okay. But I can start by identifying pullbacks. What if it doesn't pull back until next week? I got time. I got time, baby. One thing that I would do here if I were me is I would identify that. Hey, guess what? If you're in my day trading group and or swing trading group, we're going to do a session today at 2 p.m. I'll put it in the swing trading group area. So on Tuesdays at 2 p.m., for all members of the live trading groups, right? Again, swing traders and day traders, we're going to add a stop, look, and correct session where you can work with a coach to get specific answers to your pressing questions of how do I do this? How do I do it? How do I do that? What does this thing mean? What does that thing mean? When do I do this? When do I do that? What is this indicator? What's that indicator? What's this pattern? What's that pattern? Where do I put my stop? Where do I put my limit? How do I handle this? When do I move my stop? You got a burning question, we'll have a weekly session. Again, for any member of any of the live trading groups. Yeah. Day trading is now 4 p.m. That is correct, Thiago. I sent out an email. So just so you know, could be very, very tactical, but it could just be reviewing trade plans. Yeah. Yeah. I think it'll be good for both seasoned traders, but also the newer traders at boot camp that are like in the midst of going through the courses and they're like, I don't get this, or how do you do that, or how does this blend with that? You know, it's all those types of questions, but it would also be like for a more experienced trader, you're like, hey, you know, I put together this trade and it's not really kind of working out the way I thought. What do you think about how I did all this? Once again, it's a way you can meet with a real person and get some help. Because, you know, I was doing the oil trading, I guess it was yesterday or the day before, and there's a member of the oil trading course, and I'm sitting there setting up trades, and the question was like, what are those fancy green and red boxes? I'm like, okay, you haven't taken the training course, so I'm not even going to answer that. That's not the point of being in a live group. A live group is not the right. A live trading group is not the right environment to ask, how do I trade? No. I'm assuming you already know all that. Now we need to like actually put together our plans and our thoughts, and not a mechanic of like, you don't know what that is? Oh my God. Okay. But now we'll have a course, or not a course, a time every week where you can actually ask those questions and more. Okay. So anyways, it's a resource. Compliments of the firm, no additional fees required. So it'll be every Tuesday at 2 p.m. So I'll send out an email after today's. Okay. So anyways, what I'm thinking here, this could be interesting, right? This could be interesting. In particular, if we start breaching So that means we would need to maintain a level of support above here on the first run. And then eventually, right, eventually we got to get through here. But that's not an October play. In fact, yeah, that's just not an October play. Mike says, would it be correct to assume, and I have to address that. Look, I don't know and you don't know. So think of it differently, okay? It would be down to your trade planning would be based on whether you think things have changed or not. Okay? So I don't know what you assume. Okay? But if you assumed that somewhere in here the market will revert back to bearishness, Mike, statistically, that is correct. You would have done the proper statistical analysis of that data set. So you can base some assumptions on that because you'd be statistically correct. Now, maybe everything has changed and the statistics will need to change over time. For example, statistics will change if we get a move like that. Okay, well, you can't quite see what I drew, but anyways, I think you know what I mean. Well, you'd say, well, that's statistically improbable in the moment. So therefore, you're going to remain a bear. Cool. But you might say something else going here, okay? And someone else has this plan. And that also might be what's happening. And you never know. You don't know. I don't know the future any more than you. So you could do fundamental analysis of economic data, fundamental analysis of position, of order flow, fundamental analysis of seasonality. You could also do sort of market analysis of it's a new quarter, so people are dumping a bunch of money on and trying to ride through the fourth quarter. Well, I've also talked about that. That is a market positioning scenario. And you could say, well, but you think that on the longer run that would be the incorrect decision. Good, then you would set up a bearish trade. Okay. Once again, if you're a bear, this is an area of interest for you, and this is an area of interest for you. Will it work? I don't know. But that's how you would do that. So now you would say, well, let's say you exit the daily and you go on to a 1 hour. If you see something like this, you would sell. Well, you should know that's a counter trend trade on a small time frame. You hit a weekly target on a Tuesday. Okay, obviously a counter trend. And you're like, wait, what do you mean obviously a counter trend? If you asked me that question, I would say you didn't take the training course. Does it depend on how bad or good things are around the world? What matters is where people put their money. Okay, Wayne, what made you a bull or bear on the dollar? And you mentioned it doesn't behave like other currencies. It's true. It's a reserve currency. You mentioned when the Fed is raising interest rates, the dollar tends to get weak. Yes, that was 18 months ago when I said that. We have a different scenario, okay? We have a scenario in which we have high inflation, lots of jobs, but a central bank trying to kill the economy, And on top of that, a global recession. Well, that's very unusual. In fact, it hasn't even happened in my lifetime. So what we have is not normal economics. So it's not like, let's just put it, it's unusual to have it's back, let's just say it's kind of like backwards from normal. So usually in a scenario like this, we'd be cutting interest rates if we were expecting lower inflation and slower growth and all that kind of stuff. So anyways, let me just put it simply. This is incredibly unusual. Okay? You don't typically have 9 or 10% inflation. So what we have now is something quite different. If we had inflation because things were good, things like high productivity, then the dollar would be weak. Why? You'd be buying a bunch of stuff from foreigners. Why would you be buying a bunch of stuff? You're filthy, stinking rich. Why? You have a good job, you work hard, you're very productive, and the company is profitable because how awesome you are. Well, that's not the world we have right now. The dollar's strong, and the world is in an economic decline. That's the difference. And the Fed is raising interest rates as the world is in an economic decline. So then you're like, but is the economy bad or is the economy good? And like it's hard to read because typically the government does not give $5 trillion away. Now you might say, well, Wayne, the Fed has been printing money like crazy for years. Look at 2008. Well, I'll say, first of all, the Fed didn't print any money. The Fed doesn't print money. The Treasury prints money. The second thing I would say is, well, the Fed doesn't give away money either. It creates credit. And it gives it to banks, not people that can't afford to pay their rent. Do you understand the difference? The central bank can create credit and give it to commercial banks who then loaned it out to credit-worthy investors to buy a house, to expand a business, so on and so forth. And it goes into the economy in a productive way, but it takes a long time. But it goes to credit-worthy institutions and people who are going to deploy the capital in a productive way. The federal government printed money, in this case borrowed money, and then gave it away to people that can't afford to pay their rent. Non-productive capital. So they destroyed the $5 trillion and increased the money in circulation, the unproductive money, the free money. You didn't get the money because you were productive. You're like, look at the thing I built. It's going to make society better. No, it was just money. So it diluted everything. And now we have low productivity and high prices. That's not what I was talking about 18 months ago. No. When I said when the economy is booming, the Fed would be raising interest rates. But in that scenario, the dollar would be weak. Yeah, because we'd be in a highly, highly, highly productive economy. The people with jobs are hustling. And those companies are profitable. And the people earning money because of their hard work and productivity have high levels of credit. And they want to make investments into like real estate. And they have good credit so they can borrow and then deploy that capital into assets, which further increases productivity, which increases the household wealth effect, which means if you're in Walmart and they have a 70-inch TV for only $600, you're like, pfft. You buy it and you export your dollar and the dollar weakens. See, when you're shopping at Walmart, you're selling dollars and buying foreign stuff. So you're shorting your US dollar and you're buying Chinese yuan. Great, great. Great. That's why the dollar weakens. Right now, Amazon is having trouble selling stuff. Apple is having trouble selling iPhones. Nike is having trouble selling shoes. China's closed. Commodity prices have dropped 50%. World productivity and commerce is contracting, and the US dollar is at an all-time high. That makes sense, but you can't call what's happening now your run-of-the-mill recession. This was orchestrated through ignorance. This is a man-made phenomenon, a disaster of epic proportions, created by man's best attempt to help a problem by causing something 10 times worse. Yes, says, hey, can gold come down to 1705? Sure. It can go up to 1805. It can go down to 1605. Sure. What do you mean by can? It can go anywhere. Okay? Why don't we ask more specific things? Like, let's ask a better question. Wayne, does this price here indicate likely profit taking? Yes. What does that mean to you? Okay. This can go up, it can go down, it can go sideways. But if you're going to use technical analysis, this would indicate if there are bulls in this trade, then they would take profit. But I don't know if they're day traders or swing traders or position traders. I don't know their intent. I don't know what these other people are doing. How could I know that? I just know that that's where someone will logically take profit. So how does that impact you if you're a bull? How does that impact you if you're a bear? Hey there, boo-boo. Okay. The other thing is you should also know, not only is that a take profit zone, when you take this price and you look at this time, in the training course, it says counter trend. And you're like, why? I'm not going to tell you. Pay the $88. Well, I don't have $88. Then it doesn't matter anyways. Matrix says, if you're participating in a credit-driven economy, you, by default, are a bank creditor, whether you realize it or not. Well, yeah, look, credit's good. Okay, look at the poorest countries in the world. There's no credit market at all. Where do you put your money? In a coffee tin? And you put it in the freezer? Wait, you don't have a freezer. All right. You put it under your bed or you bury it in the backyard. Okay? All right. So, great. What happens to your money over time? It rots. Whether it physically rots or not, it doesn't even matter to me. It rots. Your money in a tin can is worthless. This is why poor countries stay poor. Okay? A rich country would have somebody put their savings into a bank, and the bank lends it out, and somebody uses that money productively because you're not using it productively. In exchange for that, you get paid a little bit of money. So you're not using your money, you're saving it, but at least you're earning a little bit of a return. XX says, America is a poor country, sir. No. Okay. But whatever. I think I know what you're saying, but it's also quite ridiculous. I've been to poor countries. They're frickin' poor. America is not a perfect country by any imagine, but in many ways, it's awesome. But it's poor. Okay. What if? Okay. But when money is put in a banking system and then loaned out as credit, someone borrows the money from the depositor through the bank, of course, then they only are allowed to use the money in productive ways. The bank checks. Do you have any credit or credit history? Are you credit worthy? Yes, I am. What are you going to use the money for? I'm going to buy a mortgage, or we're going to expand our manufacturing facility, for example. Good. We'll lend you the money. Over time, that deposit that the saver initially deposited in their account to save for a rainy day or save for retirement, that credit is expanded by 10 times. $1 million in savings becomes $10 million in productive investments. And a poor country doesn't have any of that. Okay. Compared to what country? Pick any country. Okay, so anyways, ba-ding, bada-boom. No, I'm asking you. Compare it to any country you want. It's not the richest, but it's rich. And then you're like, well, what measure? Use any measure you want. I come up with it. Go to the World Bank. They use measures based on happiness. Okay? Take my macroeconomic course. I must spend 3 hours answering that question. And I tackle it from this way, that way, and another way. Oh, I see. I see what you're saying. YouTube, yeah, asking, but same thing. It doesn't matter, right? I'm still addressing it. Okay. Okay. Yeah, and that's your problem, XX. That's what I'm trying to get to. You don't have a credit banking system per se. Like, I'm not an expert in your economy. I'm not an Ethiopian expense. But you're like, but we're not broke. We pay money for our cars. Yeah, that's a problem. You're using money. Money is worthless. Okay? It's not a good sign. I'm telling you. Okay? You have to use money because there's no credit. Okay. I'm only speaking about economics, but my perception is flawed. That's fine. We'll leave it at that. I thank you for your question. Yeah, JOLTS will be coming out later, right? Am I wrong? Isn't it at 10? Is it 10 already? No. Okay. So JOLTS, what do we care about JOLTS, Michael? Yeah, I would agree that too much use of credit is bad for sure. And particularly if you're buying a car. Yeah, you're like, really? You got a 72-month lease on a car? That's stupid. But things like I'm interested in the productive use of capital, not money. And I want to know, like, a better use of capital would be, financing the purchase of a home or financing the expansion of a business. Okay. That's really what I'm looking for. Remember, I'm an economist. Okay. So, yes. So, like Brinsley's, like, credit robs people of their money when you pay a lot more. Well, yeah. So that's the problem. People are not deploying their capital appropriately. Okay. So if the issue is you're borrowing money because you ain't got no money, that's the problem. But so let's go back to the question about JOLTS. JOLTS is coming out. What do we care about? Right now, the market is analyzing, will the Fed slow down? AKA the Fed pivot. Will they change their strategy? Will they lower the terminal rate? Will they change the velocity of the rate hikes? Jay Powell said in his last speech, and I'm sure you watched it, in his Q&A, he talked about the JOLTS report. Now, of course, he didn't call it the JOLTS report, but he referenced the JOLTS report. So now we're like, oh, snap, he's reading the JOLTS report. So now we're going to have unusual volatility around the JOLTS report because 6 months ago you'd never even heard of it. Okay. Haley says, but also once you watch the central banking videos in boot camp, you'll be like, oh, now I see what he's saying. Yeah. So looking at the JOLTS, Michael says, looking at JOLTS, numbers around 11 million, and then they're coming down. Yeah, that's what we're looking for, because how do you put things in order? Before you start laying people off, you stop hiring new people. And the first way to stop hiring people is to stop advertising for your open positions, because you don't have any open positions. You're thinking about laying people off. So you call your HR department and you're like, stop hiring. We ain't got no money. So they pull all their job ads. That's what we're looking for. So for example, if Amazon.com is going to start laying people off from their warehouse, they're certainly going to stop hiring. So, right, Jeff Bezos might call up, right, his senior vice presidents and say, okay, soon as we're done with Christmas, lay people off. So step one, don't hire any more warehouse workers. And if we're short on staff, work them to the bone. And then fire them in January. And we'll say, oh, it's just seasonal. So step one, don't hire more people. Pull all the ads. Okay? So that's what we're looking at. So do I care about the number? Not really. But down is interesting. Okay. Yeah, so like Michael says, like the hiring process in Seattle seems to be changing a little bit. That's what we're looking for. Okay. A sea change, it's one of my things that bugs me because people use the word inappropriately. So when somebody says there's a sea change, what it means is a slow and gradual process. So a sea change is a bottle at the bottom of the ocean, and the waves are doing this, and it's just slowly rolling back and forth. And over a long period of time, it becomes sand. The glass breaks down and turns into little glass sand. And so we're in this sea change of the economy. A year and a half ago, companies like Amazon were just hiring anybody to get bodies in the building because they couldn't get people to come to work. And you kind of need people in the warehouse if you're a warehouse company. So they're just like, hire anybody. But also there was such demand for products because everyone was working from home and building home offices and stuff like that, spending that Biden money, that Amazon's like, oh my God, we need more warehouses. Okay. A friend of mine made millions and millions of dollars selling Amazon warehouses chain link fence. You're like, what? Yeah, when you go to an Amazon warehouse, how many acres is it? I don't know, 10, 12 acres, 20 acres, I don't know. And you'll notice all around the warehouse, there's a chain link fence. My buddy sold Amazon a huge contract to make chain link fences to go around. I mean, how strange, right? You're like, wait, yeah, there is a fence there. Well, somebody bought himself a brand new Porsche. Whoop, whoop, with that Amazon money, which was, whoop, whoop, that Biden money. Cool. Because people got thousands and thousands and thousands of dollars for free from the government. So they bought crap on Amazon.com. Whoop, whoop, whoop. Need more warehouses. So now we go, now all this time's gone by and you're like, snap. We got too many warehouses and too many people. And the people we hired, they're not even that good workers. So let's just find a way to get through Christmas. So right now, Amazon's going to have, for the first time ever, another super sale. Whatever you call it, I don't even know. But they do the super sale earlier in the year. Their once a year super sale to clear inventory. They're clearing inventory now and we haven't even hit Christmas. Clearly there's something different going on, right? So maybe this is what's going down. This is how you got to look at JOLTS. Well, maybe they're finding a way to survive and boom, they're going to lay everybody off in January, February. So what would we see now in October? No job ads. And that's what JOLT is. Okay? Ads. Hiring advertisements. You see? So that's what we're looking at today. And we only really care because Jay Powell mentioned it. But to be honest with you, that's not the type of analysis you would use JOLTS for. The real issue here, and again, something that I did study in Harvard, and we did talk about it over one or two lectures. By the way, who is my Harvard professor? An active senior economist at the Fed. So during the day, he worked at the Boston Federal Reserve Bank, right? The Federal Reserve Bank of Boston. And then he would commute along the river, drive over the bridge to Cambridge, and teach me about economics. And we studied the JOLTS report. So we got to be careful. The way we're using it now isn't necessarily how you use it, but this is what the market cares about today. So don't get too sidetracked. It's just a piece of news, and it's being used in a strange, unusual way. It's unusually important today because it's the topic, but that's kind of like fool's gold. It's like this. Be careful. We're using it in a strange and unusual way. Strange and unusual way. And I should put that over. I have shale on my desk, by the way. Yeah, I got shale because I'm a mother fracker. I'm a mother fracking hustler. Mother fracking hustler. Because I trade the oil. I like the oil. Mm-hmm. I like the way you trade. Mm-hmm. So anyways, yes, today JOLTS will come out. Yes, it will provide volatility. Yes, it will be commented upon by many people on CNBC and Bloomberg, but please don't be distracted by the noise. Okay? Yeah. So remember, I spent hours and hours reviewing the JOLT report with a senior economist from the Fed. If you got a better story than that, you let me know. Okay, I think that's a 10. That's coming up hot and fast. Okay. We're approaching the hour of profit taking, oil traders. Wink, wink, nudge, nudge. You know what I mean? Wink, wink, nudge, nudge. I didn't. Okay. So that's cool. That's cool there. Biddy is on the central pivot. That could kill things. Yeah, I know it's 7 minutes. I'm going to end by then because I'm not here to give you a raw move. Okay? There are plenty of people on YouTube that will get you to trade, make decisions for you. Even if they're dumb decisions, I'll help you make dumb decisions. Okay? I preach to teach. Okay? Yen's. I'm really cautiously watching this one mostly. Here's the result, okay, of the overnight 25 basis points. Okay. Very cautiously raising rates, huh? Here's the thing. Apparently the market is saying, oh my God, well, if the RBA is only raising by 25 basis points, maybe they know what the Fed is thinking. Maybe the Fed's only going to raise 50 basis points, and maybe they're not going to do... Oh my God, Jesus Christ. Maybe they have inflation because of supply chain constraints, and yet the major purchaser of their commodities is closed. Maybe their oil, their gold, okay, and their diamonds and their coal prices are down. Now, I'd be very interested in watching the demand increase for Australian coal. Thank you, Majib. Yeah, well, again, only if you were a bull, right? And I think we're going to have a bearish move later today. How big? That I don't know. But I can guess on the timing of things. Okay. So anyways, so this is a big move here. Okay. Okay. We had this scenario here in the Asian session today. Okay. And we had this giant move up. What did I say last night? What advice did I give traders last night? Even if you weren't listening to me last night, even if you weren't in my live trading group last night, okay? What did I say last night you should do if you found yourself up 100 pips on the Aussie specifically? Michael says take profit. Why? Like the what? I really don't care. Historically what? Early target in the week. No, that wouldn't be it. Now that is valid, Johnny, but that's no. Okay. Not pay yourself along the way. You guys are so esoteric. Why would I say if you're up 100 pips, you should take profit? Because I have found, after doing this for 20 years, that's what the Aussie dollar does. It will jump 100 pips and then it'll crash 100 pips. Now, what story did I tell last night to try to paint a picture? What story did I tell 5 years ago to paint the same picture? What story did I tell 10 years ago? What story did I tell 15 years ago? It's the same story. But I'm trying to, well, first of all, that shows consistency, doesn't it? But it also shows you how long I've known this information. But I tell a story every time I want to tell the story, and it's always the Aussie. What story do I tell? I want to know if you remember, because my goal of telling the stories is that you'll remember the story, and then you'll remember, like, the moral of the story. Oh, well, the Aussie dollar will always pull back, right? 100% drop after a spike. Nobody remembers the story? See, then that's a flaw. I gotta tell the story better. I like to tell you where I'm sitting and what I'm doing. I like to tell how I felt. Remember, it's emotions, isn't it? What food was I eating? You remember I had 2 different drinks? Why do I do that? You're like, that's unusual. You might remember it. What was I eating? What was I drinking? Where was I sitting? Why was I excited to be sitting there? And then what did I do with my food and my drink? And what did I tell the bartenders? Where did I go? How long was I gone? And when I got back, how did it feel? Right, the bull and bear story. What hotel? What city? No, the Waldorf Astoria, not the Ritz. Okay? Hold my food at the bar. I'm going to make some money on the Aussie. I'll be right back. Thank you, Denise. Yes. Hold my food. That's something, isn't it? Again, it's a visualization. I'll be right back. Okay? So only 10. Thank you, Harvey. Let's just call it 10 mil instead of 11. Okay, great. Who's ghost? Yeah. Where else have I hung out with this ghost? And now you're like, I don't remember. I remember, but I don't remember the name. Okay. But again, this is what is called neuro-linguistic programming. I'm trying to get you to remember. I can tell you how I trade the Aussie, and there's a statistical chance, a high statistical chance that you're not going to remember. This is what I do. After 20 years, this is how I treat the Aussie. Boom, comes, goes. 3 weeks later, you don't remember it. Thank you, Jekyll Island, Georgia, which is the place JP Morgan created the Federal Reserve Bank. Okay? Yeah. So there's all these stories. And all I tried to teach, whether I told the story last night, 10 years ago or 15 years ago, is look, the way you handle the Aussie is it tends to spike and then completely collapse. So if I were me and I was up 100 pips, I would take profit. I would not hold. Why? I expect it to totally collapse. And now that time has passed since last night, you would have lost your entire profit. And I hope that helps. And maybe 5 years from now, it'll be one of the things you remember. Okay? You'll say, oh yeah, in that bar. I don't know if you see the mahogany in this bar. I don't know if you see my red wine glass and my scotch glass. Now, if you heard the long version of the story, you know it's an 18 Macallan. And I'm eating my steak. I'm like, I'll be right back. I have to go. Okay, you start remembering these things. Okay? And then it'll all translate to, in that story, it's the Aussie jobs report. Pop, take the profit, come back down, done. Okay? And that's all that matters, is that you remember. Okay? But do I remember the wine? No, I do not. Yeah, I do not. That's good. Okay. So anyways, I'll leave you be. I hope you have a wonderful day. I got to send out an email to everybody in my live groups that we're doing the Stop, Look, and Correct session at 2 p.m. So I got to set all that up. So you'll go through the swing trading group, because remember, swing traders and day traders have access to that. So just go through that same room. Okay. Yeah, XX, that all of that is true. There's no doubt. So peace on earth. 2 p.m. Yes. Congratulations, Satoshi. 2 p.m. I'll send out an email. And remember, it's Stop, Looking, Correct, so it's going to be technical analysis, and it'd be the right place of like, hey, can I review this trade with you? Or how do I handle that situation? And then it'll be recorded and put in the swing trading group area, okay? Yeah, well, the real Satoshi would have that kind of money. But yet, nobody has that kind of money. So it makes you kind of wonder, huh? Anywho. Yeah, have a wonderful day, Satoshi. And everybody else, too. Have a wonderful day, XX. Thank you for... yeah, I don't mind the challenge. I don't mind the discussion. But obviously, I'm going to be opinionated. And obviously, you're going to be opinionated. So, hey, I think I understand your point of view. I don't disagree with many of it. Maybe the interpretation and their short-term and long-term and all this kind of stuff. But I get it. I understand. So I'll see you tomorrow. Good, Satoshi. I'm super proud of you, and I'm sure your mom and dad are.